Welcome to Tinks Invest. We're talking about investing, finance, and professional development. As the recording time of 9:56 a.m. on Eastern Time, Ethereum contract $2,692, down about 3.56% so far. As you can see clearly on the equity market and the crypto market, it's kind of a mixed bag at the moment, but relatively flat to down across the spectrum, with the equity side a little bit more prominent in the positive side of the spectrum, knowing the fact that Google or Alphabet yesterday had a huge knockout earning report. And also, they announced that they're going to be doing a 20-to-1 stock split as well. So, whenever you see those combinations, it subsequently drive Google or Alphabet to jump about 9% in the aftermarket hours. And with respect to some of the foreshadow news that we need to be watching out for, one is something that we're seeing more of a developmental front as of 16 minutes ago, coming out from CNBC and other publication companies, talking about the U.S. Initialization onto moving 3,000 troops closer to Ukraine, as the Russian crisis seems like it's escalating. Right, obviously we have to take the grain of salt with respect to the media affectation. Right, maybe it's just more of a defensive effort. Right, so we'll see how that goes. And also at the same time, if you collectively think about the positive earning report that we've been getting so far, just last week all the way to this week, and also the conversion from January all the way to February, we're seeing a rotation among the technology sector, among institutional investors and subsequently the retail investors chasing in. So today is kind of a mixed bag, obviously downward, driven by the pushback from the Ukraine-Russian crisis that's still cultivating, being net canceled out by the positive news coming from Indian government yesterday that they have officially announced that they're confirmed that they're never going to be banning crypto, but they're actually going to be adopting crypto. But with respect to the capital gains tax that Indian residents are going to be getting, is going to be about 30% of capital gains tax, which is, comparable to, equity or stocks when you take capital gains in more of a short-term perspective. Obviously, it's like varies by state by state. I know in New York it's about like 49 to 50% of a short-term perspective, 15% for more of a long-term hold perspective if you take capital gains. So again, collectively, relatively of a mixed bag, right? In a foreshadow perspective, we need to watch out for is the Friday affectation. Well, firstly, it's the weekend affectation, which is something we know, right, as we head on to the weekend again. But also the job report that's going to be coming out around 8:30 a.m. on the Eastern time, specifically on Friday morning. So in the next couple of days, we will have to watch the needle. Well, firstly, how's the Ukraine war is going to be percolating. Secondly, is if there's any major variance or there's a misalignment in comparisons, Wall Street expectation on the job number comparing with the actual number, right? And we know that there's a skew in the statistics because of the fact there was a gap from the end of December all the way to basically the first 2 weeks of January, right? So there's a dent in the number, but we know that Wall Street understands that affectation and they're going to make that psychological adjustments. And if we don't see major variance in comparisons to the adjustments of the number already, we should be seeing relatively good sizable, not sizable. We should be seeing a more of a moderate surge from here to sustain the bullish momentum going forward, right? So definitely a big event coming up on Friday. We'll see some sort of like a investment consensus based on the price reflection tomorrow, as we obviously 24 hours out of the report releasing. Just look at the news front. Just let me see if there's anything specific that I want to be talking about beside those. I think collectively nothing really worth mentioning. So let's just dive right into it. Respective recording time of 10:01 a.m. on the Eastern time. Ethereum just trading around like $2,700, down about 3.30%. Again, the sell-off that we're seeing right now is due to the, investors looking for a reason to kind of take profit because we are testing the 2,850, but we just could not get there. We couldn't get there twice, right? And we were you could see that we're peaking down right now on the RSI perspective at a neutral level, right? And at the same time, MACD is already showing some sort of a curvature. So I wouldn't be surprised if we come back down from the 2,700, which is not a real level, but testing the 2,650 again and see what momentum will be going forward, right? And we're gonna test this level. If we do not see anything specific, let's jump off the page in the next couple days or so until the job numbers come out. If we have a negative job numbers, we're gonna come back down to the 2,350, right? And if the number is really, really terrible, we might even get down to the 2,150, right? So is this like a bull trap? I don't know if that's the right characterization. It's just more of the market reacting based on media expectation and obviously some of the short-term volatility, right? But if we know the technicals comparing with the fundamental numbers, we know that that will be an opportune time, right? It will allow you to see the gap, and I want you to capture and capitalize on the gap on the margin to allow you to take the profit from there, right? Bitcoin's down about 2.55%, the 37. We're testing at the comfortable level. The next level we need to get up to will be the 40,000. If we go down, we'll be going down to the 35, obviously, 36 to 35, around or 34,400, which is like basically rock bottom based on the technicals right now. And I think with respect to the current level is 37.79, still a tolerable level to incur risk, to be honest. But for us to like really have a confirmatory signal on the reversal, would be the 40,000. Dogecoin's at 14 cents, down about 1.32%. Anywhere from the 13 cents 72 all the way to 12 cents is still logical. Cardano's at 104 right now, down about 5% right now. Anywhere from 102 all the way to 92 is logical right now. Solana is down about 2.57%. I am interested into buying more as we break 100 again. We'll see. I can't really wait, right? But I would just ultimately I don't really wait for the price to go to a certain level. I will look at the technicals to see if it's a good setup for us. It's a big difference comparing to like waiting for the numbers to drop to the level that we identify, to actually looking at the analysis and identifying there's a gap here that maybe makes sense to incur logical risk, right? So I look forward to being observant. I look into technical to see if it reflects in a good level, and I will incur more risk on Solana going forward. XRP is down about 1.56%, at 61 right now. Anywhere from current level to 55 is still logical level to incur risk. Polkadot is down about 0.41% at the 20 cents right now, basically 1960. Anywhere from current level to 1587, still logical, with the 40 out of 70 right now. Algorand's at 98, right? Just about to break $1. You can see that we form a golden cross. That's why we still percolating to go up with the 35 out of 70. So I do see more bullish momentum coming for Algorand. Shiba Inu is at the low 2000s, down about 4% right now. Anywhere from low 2000s, again, like 1400 to 900 from here. MagTech is down about 4.16%. Again, very fishy with 3 of these sharp flash crash is not something that I feel comfortable doing. I would rather stay away than actually chasing in, despite how low the price entry is at $157. But if you really, really believe in it, again, I'm not an expert in this one. 143 to 120 from here. AVAX down about 3.15%, 59 to 50 from here. Luna, we are just breaking the 52, again 62, 52 to 45 from here. It's a tolerable level, right? At the same time, at the 36 out of 70, so not a terrible level. But if you are incurring risk right now, we are basically around the level of consolidation, like obviously 52 to 45 from here. Respect to risk management, these are levels identified so far. So if we take a read and refer in terms of your risk tolerance, right? And never go all in. Even though if you go all in, your all-in definition in my book is basically 30% or 25% of your cash reserve total, right? That's all in for me. 25% of my total cash reserve, right? So that's still a small amount, right? Because you never know how the market will triangulate from there, right? So I think it's gonna be not as a volatile week ahead in comparison to obviously weeks ago, but still like some lingering on type of news with respect to Ukraine, Russian war, and the job numbers coming out. But collectively, it's definitely a lot more tolerable, and I think we're building up our tolerance as well, to sustain the storm. right? So appreciate you. Hope you guys have a good day and take care.